Hello, ladies and gentlemen. It's my pleasure to welcome you at another online event by BONARD, our webinar. This time, we're going to talk about student housing in Australia. Um, I am joined today by my colleague Grace, our director of the China office, to share with you the specifics of the market in Australia. We've prepared a deck of 20 slides to go over the general market comps. The webinar is aimed at the audience new to the sector, those who are already active, who would like to see and know what to focus on when doing student housing in Australia or planning to do so. I will start with introducing the group. Today, we have up to 100 registrants that are joining us for the next 30 minutes. The group is 30% investors and investor managers. We also have up to 10% of developers, then another 10 operators. I'm happy to have some educators in the group joining us because it's only then a comprehensive discussion about the sector with demand and supply side present. I will share my screen and we'll kick this off. If Grace, you can confirm that you see my screen?
Yes, oh, good.
Great, super. A bit about us, so we know what we do and what is the angle that we represent. We are a global research and advisory firm. It's been almost up to 20 years that we are on the market. We are very focused on student housing, built to rent, senior living, so all the rental living markets. This is a sole focus of us. And we are present in Europe, but also in China, where now Grace is based, covering 370 markets. So this is a global coverage that does include Australia. There are 6 city markets that we cover there on the annual basis, and the data presented today would be all from that database. We have over 1,000 projects conducted. Our core is research and advisory. It's up to 100 people team that we have across 4 offices, as I mentioned, globally. 2 core products that we offer are data platform, so information on student housing comps that we now have on the platform. This is all across those 370 markets. The comprehensive database of demand, of course, and all these various types, but the provision of student housing per building is provided in our platform, added by the transaction comps, as well as the market news. This is provided on a subscription basis, while our other product is ad hoc and on demand, the commercial due diligence. So a deep dive on an asset-specific, location-specific analysis with all the due diligence musts, be it commercial DD or strategic support or the financial assessments. Some of our clients are those that use a product at various stages of their business, be it the investors, developers, but also educators that you see there on the screen. We assist those as well to get more international students per market, to diversify their international student pool, assist with recruitment, so those students then have accommodation support by those investors and operators. They either underwrite the strategy with the data that we provide or have an understanding of the market performance for the markets they are already in. This includes student, but also those other markets that I mentioned, being BTR or co-living, though today I'm wearing my student housing hat and presenting it all from the student housing market and angle. Now I will give my word to my colleague to provide you some insights about student housing demand, as that been several turbulent years over there for Australia. Grace, go ahead.
Thank you so much, Julia. And hello, everyone. Thank you all for joining us today. I'm glad to begin with the latest student demand data on the Australian student housing market. So we can start by looking at the global landscape first. After this strong post-pandemic recovery, the traditional Big Four study destinations, they all experience a period of adjustment. As you can see on this slide, the latest data and our forecast of the next 2 academic years, they showed to a stabilization, or in some cases, contraction of the international student population in these major destinations. So the growth that we saw in the last 2 or 3 years is cooling down. What's important is that this slowdown is primarily being driven by the US and Canada, where we project enrollments will continue to fall. But looking at Australia specifically, the explosive growth is behind us, perhaps, but we expect the numbers to stabilize over the coming years. So, of course, the contraction in the Big Four doesn't mean the global demand is shrinking. It's rather transforming. We are seeing growth in Europe, across Asia, and in transnational education. So it's a clear sign that the global education landscape is diversifying. So against this backdrop, Australia's position remains robust with a strong work-study race that makes it quite attractive destination, even in the middle of the global uncertainty. So moving on to the next page, where we can zoom in on Australia, is crucial for understanding the real driver of demand here. So on the left chart, you can see the total higher ed enrollments in Australia compared to the international students enrollment from 2018 to 2024. The story here is quite clear. The overall growth is being driven by the international demand. So the 6 years compound annual growth rate for international students is 3.5%, which is significantly higher than the 1.2% for the domestic students. But the right side of the slide, it also tells us the most immediate story for the sector. This is the data on the commencements, which is new students starting their courses. This is the leading indicator for the future housing demand. Here that we can see the trend is slowing. In 2018, international students made up to 35% of the overall new commencements. But by 2024, that figure had grown to 40%. Well, the 6 years figure for international commencements is strong at 3.7%. But if you look like this year-on-year change, in 2023, that we saw a massive 37% jump compared to the previous year, but in 2024, that growth slowed to just 5%. So, which means the repeat surge in new student arrivals is moderating right now, which will be the key factor in planning for the upcoming years. So moving on to the next slide, that we can take a look at what does the visa pipeline tell us. This is where the pictures gets even more subtle. This chart, it shows higher education visas granted in Australia from 2019 with our forecast for 2026. So we can see after this peaking point in 2023, the total number of student visas granted decreased sharply by 13% in 2024. The negative trend was somehow stopped in 2025, but the composition has changed. But we saw a significant recovery in onshore visas, which is students already in Australia looking for renewal or changing status, grow by 30% last year. But offshore visa grants, which means the new students arriving from abroad, continue to decline by a further 11%. This is actually the key driver. The Australian government is managing growth, and this is being felt most actively by prospective students applying from overseas. So our forecast for 2026 projects a total of just over 181,000 visas. It's a continued reduction from the 2025 level. Just for your reference, Q1 2026 data has already seen a higher education visa grants at roughly 30, just slightly over 30,000. It's a 8% decrease year on year. So this also confirms the downward trend is persisting. Well, this decline is the result of the direct government policies, like the higher visa fees and more strict assessment levels, and also some indirect factors like longer processing times and higher rejection rates, which is also creating uncertainty and deterring applications. So we are seeing our numbers are flattening. So the source of the demand is shifting dramatically. If we take a look at the next slide, it's one of the most important to understand the future housing needs. So here we can see that Australia remains highly popular in Asia. China and India, they are still the volume generators, but the growth engines, they are coming from somewhere else. If we take a look at the 6-year figure, Bangladesh is up 27%, and Bhutan is up to nearly 35%. Nepal, which is already at a high volume number, it also shows strong growth at 9.5%. On the other hand, that we can see China's growth has stagnated at just 0.4%. It's impacted by the rise of alternative education hubs within Asia. Well, similarly, in India, it also already have a high volume. The growing is at quite slower, 2.1%. It's largely due to the increasing visa hurdles and cost. So what's crucial for our audience here is that understanding the risk profile. For some markets like Nepal and Bangladesh, they are growing fast, but they are also considered more unstable, with students more sensitive to the policy changes. But meanwhile, if you can take a look at those mid-tier markets like Vietnam, Sri Lanka, Indonesia, and the Philippines, they are actually quite steady contributors, with Australia being the number one destination for many of them. What is important to look at is that the last country beyond, besides those Asian source market, the emergence of Kenya with a 90.5% compound annual growth rate, that Australia stands out among the big four as the key destination, especially for those sub-Saharan Africa regions. So this is a growing and also diverse pool of students that is contributing to the Australia's demand landscape. So moving on, we can take a look at the visa data on these demand trends. This also shows the real friction points in the system. So here at the top line of this table that shows the share of volume of visa issued. China and India still lead here, but the more revealing metric here is the grant rate. This is where the market is being shifted. There we can see China has a high grant rate of 93%, but the growth markets are being restricted. And meanwhile, then we can take a look at Pakistan. The grant rate is of just 50%. Kenya is at 69%, and while Nepal is still quite high volume, the grant rate is 85%. It represents a quite significant tightening compared to the previous years. Bangladesh has a high rate of 93%, but this is in the context of the massive growth in the applications, many of which are facing increased investigations right now. So what this tells us here is that the volume generation countries are seeing numbers decline, while those rapidly growing destinations like Nepal, Bangladesh, and Pakistan are being constrained by low or tightening visa grant rates. This is the direct result of the evidence level framework, where many Southern Asian nationalities are now considered higher risk. It requires more extensive documentation and also facing a longer process times. So for investors, this means that you cannot simply assume that growth in application will automatically translate into growth in the approved students. The approval rate that it varies significantly by nationality, and also the policies is actively shaping who gets through. Finally, to the next page, let's take this down to the ground level where the students are actually going. So this is a snapshot of the international enrollments in major Australian cities compared against benchmarks in the UK and also Canada. What we see here is one of the diversification. Sydney and Melbourne, they remain as the giants, but look at Perth here that the 5-year figure of 10.6%. It is emerging as a substantial student destination. So many may ask, why Perth is actually being driven by migration settings, greater affordability compared to Sydney and Melbourne, and also proactive state government promotion. And with this closer to Southeast Asia and India, makes it actually quite a major advantage. So the growth of Perth directly counters the trend that we see in UK cities like London and Birmingham, which is also growing, but from a different base. So similarly in Canada, cities like Toronto, Montreal, and Vancouver, they are also showing a more moderate growth. So the rapid expansion of cities like Perth and also still relative strength of Sydney and Melbourne, it shows that Australia is not a uniform market. To summarize my part, demand is stabilizing. So the source markets, they are diversifying, and the policy is actively reshaping the student mix. With that as a demand backdrop, I will now hand over to Julia, who will walk us through the supply side of the equation. So over to you, Julia.
Thank you so much, Grace. It's very interesting to hear on the student housing dynamic changes. Let's see what is there for the students to stay and live in. So this is total student housing offer, purpose-built student housing by both types. You see on your screen of total of 107,000 beds that are split between private offer and the non-private one. By private offer, we mean those private student residences that are operating for commercial basis, often backed up by private investors and prepared by private operators and developers, while the non-private offer is operated by the university, non-for-profit organizations, and other. So for the Australia, the total stock is still rather low, but the offer is driven by the private sector, unlike some other destinations that you see on your screen on the right, be it in Canada or in Germany. The main 6 markets that we cover are also the ones that we are reporting this data from. So the housing shortage, this lack of student beds, this remains the main constraint. And then this international education restrictions that Grace talked about by the government, excessively linked to the problem. Australia has announced this link between the student housing growth, or kind of the prevalence of that growth, so to say, with the housing shortage quite vocally. There's been a challenging 24-25 period for this international education, the limitation on students that was proposed, the significant cut of the ELICO sector, so the courses to study English, then higher education visa uncertainty, raised cost visa, what always Grace was talking about. The new direction for the regulation framework was increasingly linked the lack of housing to the need for more students. Last year in 2025, for example, the University of Sydney was reportedly denied a large allocation to the international enrollments that they wanted to due to insufficient housing commitments. And we see also another side of coin where the universities that are building more housing are rewarded. And then in the recent open letter, actually in June 2026, Universities Australia was arguing that the country has a genuine housing shortage, and then international students are relatively a small portion that contributes to the overall housing demand. We have a much bigger pool of domestic students. And then restricting international students' mobility wouldn't help the housing shortage, the crisis, or the affordability problems. Higher education and international students are economically intertwined, and this wouldn't help the housing shortage problem. Governments should focus on increasing actually housing supply, including that one for specific student housing supply. Despite this strong appeal by the institution and the new developments that are happening, I will show you more on the following slides. There is a still low provision rate in the country compared to international benchmarks, be those in the UK or Canada. Domestic mobility, as I briefly voiced, is also increasing over time, steady. The students are choosing study away from home, particularly in those big metropolitan cities such as Melbourne, Brisbane, and Sydney. The clear need for housing is out there, discussed in the public domain, but the developments are still slow. Some are not going through. There are financial challenges to kind of boost the pipeline to the levels that are needed. This streams to private-public partnerships. We see cases of universities and developers partnering for new developments, or, for example, the conversions of existing buildings into student housing. Something that, of course, would help the situation, but is rather a small drop in the ocean to change this structural undersupply. We see operational assets performing strong in terms of occupancy. And Australia as a destination remains relatively affordable when we compare to the UK or Canada. So this cost advantages, positive student dynamics, make it lucrative and potentially investable market to student housing. Who are there already offering to students and developing their portfolios are these main brands. The market is heavily driven by the 2 players in Lodge and Scape, and then the other 2, so compoundly 4 providers contribute to 74% of the private, so commercial market. Then on the right side of the screen, you see a bit of flavor into the ownership of those operators. We see Samty Holdings, that was a recent transaction as well, who required the ownership of Unilodge from Pamoja. Of course, Scape is not a publicly listed company, but is best described as the founder-led business. They committed 700 million Australian dollars in equity in 2025, and are supported by major institutional capital, majority South Korean, with the prominent strategic vision to develop further student housing in Australia. Campus living villages, as you see there, contributing 7% of the kind of overall stock, is jointly owned by the consortia of 4 companies: Hot Plus, Rest Super, Equip Super, and J Super. And then they operate more than 40 villages globally under this leadership group. And then the next 4 that you have there: Vihu Hospitality, 5%, Student Housing Australia, 4%, Student One, 3%, and then the Global Student Accommodation, GSA, is 3%. That was the standing operational stock for students in private market. This is what is coming. This is student housing supply across those major hubs. Of course, Melbourne is leading the way with the combination of current and future pipeline. So on the kind of left of those bars, you see Sydney. In terms of new supply, what will come? Actually, Adelaide is the top market. We are expecting 7 new developments in the next 5 years that will contribute to over 7,000 beds. Those are very major plans and schemes, ranging from adding 500 to even 3,000 beds. Majority of these schemes, 6 out of 7, are still in the planning stage, so the construction hasn't started yet. In terms of total add-ons, of course, the Melbourne and Sydney are adding less beds, and then these 2 cities kind of contribute up to 20 new developments each in the next 5 years. The offer of those residences and the product they are adding to the market is on the continued trajectory in terms of rent growth. Student housing rents are growing globally, actually, and Australia is not an exemption. We see a bit of a slower rent growth since 2025. It's all understandable in terms of kind of macroeconomic circumstances, but this rent growth is still positive. It outpaces the rate of inflation, as well as disposable income change that we see for the respective years. And we are adding 2026 statistics as we speak, waiting for the further advancement in the calendar year so we can provide more flavor. The transaction activity is speeding up, all at an upbeat trajectory and trend. These are all the signs of the revived student housing market activity that was maybe a bit slower during COVID. Signature transactions you see here on the screen, starting from, let's say, 2023, where Blackstone acquired the Brisbane-based student housing platform Student One. We've just seen it on the pie chart for the kind of existing student housing offer. This was 3 premium student housing assets acquired, over 2,300 beds. And then this spree of major kind of transactions, bigger deals, and portfolio transaction continued. You'll see 2025, we decided to highlight 2 deals, actually, by Greystar and Mapletree. And then there was, of course, a more recent development, Samty Holdings acquiring the majority stake in Unilodge from Pamuja, as mentioned. We see basically changing profile of international students, as Grace shared, a strong performance of the top 6 city markets in Australia, performance of the assets, their rent growth brings a positive confirmation to those who are already in the market, and the pipeline remains low for those who would like to enter. To summarize what we've just shared with you over the last 20 minutes, thank you so much for joining. For the remaining time, I would like you to encourage to sign up for our Student Housing Insider. This is so-called news feed, highlights of the sector for the deals, some of those that I've mentioned, new stock that will come, and our expert analysis from the field. Please feel free to subscribe with the QR code or reach out to us for the subscription, and then you will be able to read this on a regular basis. And then there are some events that we are also offering. And actually, one is coming in Australia this year. We would like to showcase the signature performing student housing assets already in the market. So we will be traveling to the country for 3 days, touring those projects, talking to the asset representatives, their investor and developer hand. So you get an experience of operational student housing right by touching the real estate. We would be organizing the tour of the investors and developers at the end of November. So hope to see you all there, and it's possible to register by the link on our website. Thank you so much for your time. This is us if you would like to contact us, and the slides would be available for the event attendees following the session. Thank you so much.